Hi, everyone. This is the Daily Rip Live. It's Wednesday, July 30th. I'm Katy Perry, joined by Shai Balor, and Yoni Assia, co-founder and CEO of eToro, is with us. Yoni, what's up?
What's up? Everything is great. Everything is great.
It's been a minute since we saw you. I think it was, May 14th? We saw
Yeah,
you on your
May.
IPO day.
Yes, on the IPO day, very, very exciting day. And I have to say, it does feel like it's been a year since then, but it's only been like 2.5 months.
I know. How's it been so far? Probably just a whirlwind.
It's been the same, just bigger and more.
Yeah.
So now running eToro into the next stage of growth as a public company, and very excited about a lot of acceleration in product development and scaling up our global business.
Yeah, that's what we're here to talk to you about, because Shai and I have been talking a lot about some of the topics that were covered in your announcement yesterday. So let's get into that. You guys announced some news around tokenized stocks yesterday, which is a very, very hot topic, one we cover a lot on the show. Let's start with what was the announcement? What are you all building? And then I want to dive a little bit into sort of how these things work for our listeners at home who might not be as familiar with what asset tokenization
Sure.
is.
So first of all, we were very early on to the concepts of tokenization since 2012 when we wrote the Colored Coins paper. So when I started looking at Bitcoin, I saw the opportunity of the 24/7 global ledger, and we actually wrote articles about it. And Vitalik Buterin actually worked with us on the white paper of tokenization on top of the Bitcoin protocol. I still believe eventually we'll see also more tokenized assets on Bitcoin as well. And in 2019, we actually tokenized gold and silver and several currencies as well. But I think back then, the regulatory framework was still not sort of sophisticated sufficiently for digital assets or digital securities. Yesterday, we announced expanding the 24/5 trading universe in eToro, opening up 100 of the most popular S&P 500 stocks on eToro to trade 24/5, alongside also the new launch of futures on the eToro platform, and specifically what we call what the CME calls. These are exchange traded futures, spot quoted futures, which are actually smaller contract sizes, so more for retail investors, and actually almost 24/5 without a short like expiration. One of the biggest problems with futures, that actually the crypto world sort of fixed with perpetual futures, is that they expire every month. And with the launch of the new 100 stocks 24/5, we also issued tokenized stocks on the Ethereum network, where our customers gradually will be able to actually take stocks and withdraw them into their on-chain wallet, then send them to another user to be able to then deposit it back into their account, basically bringing the concept of 24/7 transferability of stocks to users. I always tell the story, I think you heard it last time, that I started trading when I was 13 because my father gifted me some shares to start my trading. So hopefully with on-chain transfers of stocks, we'll see more people receiving stocks and enabling them their first access into the world of trading.
Yoni,
Fascinating.
can I ask you a quick question? I think tokenization is clearly catching some steam in that space. You guys are doing a very specific route on tokenization, which is open sourcing it, going external via Ethereum, like you call it out, where Robinhood is doing it in-house. Can you communicate like what the benefits are on doing the open source Ethereum routes and why you decided to go down that avenue?
Sure. So first of all, generally, I think everybody's been talking about the tokenization and the opportunities of tokenization for a while now, with expectations of reaching like $10 trillion in 2030 and $100 trillion in 2050. And I think there were sort of two big hurdles. One is which blockchain, sort of which eventually blockchain. Is it the permissioned one? Is it the one that the banks connect to? Is it the public one like Ethereum or like Robinhood and Coinbase basically running their own layers? And the second big hurdle was regulatory clarity. So how do you issue them? How do they work? How do they cross border? And I think both of those are still not 100% clear. So I do think we'll see changes in the future. But what we were opting in right now is for the simplicity of people being able to basically send and receive. And for us right now, ERC20 tokens are that sort of simple form of sending and receiving assets on chain. But we'll definitely keep an eye on everything progressing. We are talking to some of the, I'd say, large groups of financial institutions who usually are working on more permissioned layers as well. So there's a question on how do those interact also with another. So a tokenized stock of eToro, how does that speak to a tokenized stock of Robinhood or of X stocks, right? So I think there's still a lot of questions on how this eventually rolls out, and also what's the killer feature of tokenized stocks.
How do you determine, I think you mentioned 100 publicly traded companies. How do you determine which companies? And looking ahead, is the plan only to have publicly traded companies, or is there an appetite to expand to, it seems like you could tokenize a lot of different things. So talk a little bit about where you started with that and kind of what the roadmap looks like.
Sure. So we definitely believe that this will expand beyond just commodities and stocks, and eventually will include also private shares, as well as real estate, which is actually progressing very interestingly in Europe, right? Because Europe is a very fragmented market. Each country sort of has their own real estate infrastructure, but now with tokenization, what we're seeing is a lot of the local financial institutions are starting to look at tokenization as a solution to try and build a pan-European sort of real estate market, more similar to the one that works in the US. So we do see a lot of opportunities, I'd say, in the coming years. So I don't think everything is happening at once. I think usability and sort of the appetite of consumers, as well as liquidity in some of these markets, are key. The reason we chose the 24/5 top 100 stocks is exactly because of that, because of liquidity. So one of the key questions of, I would say, the second potential killer features for tokenized assets and tokenized stocks is DeFi protocols, whether it's potentially trading them on automated market makers, whether it's using them as collateral for lending protocols. And in a lot of those cases, you have to have liquidity in order for the asset to be efficient on chain as well. And therefore 24/5 traded stocks makes more sense because it means you have 24/5 liquidity and pricing in the markets.
And I know you guys, so eToro, you're really, one of your biggest strengths is just the international reach you have and the history of building internationally. I'm curious, for me as an outsider looking at tokenization, I understand, it's a little easier for me to understand an international user wanting access to US assets, because it can be a little more difficult to get to those in different places. But for someone in the US, how should they think about tokenization of, why buy a tokenized asset with Apple versus directly into Apple? Can you just, at a high level, what are the different use cases?
Right. So first of all, regulatory framework in the US is still in progress. I think there's a lot of expectations now after the Stablecoin Act or the Genius Act. So I think Europe is a bit more advanced in where sort of MiCA is. This year, a new pan-European regulation came into tact in Europe, making it actually, I would say, the most advanced region from the point of view of regulation on digital assets. So I think in the US, it'll take a bit more time. I believe that a big benefit is transferability. So when you think of owning Apple shares, it's very hard for you to give $50 of Apple shares to either your kids or to a friend. And I think that's a great usability. I think transferability generally is what also sort of took to the rise of stable coins. So if I remember like 5 years ago, people talked about stable coins. They're like, why do you need a stable coin dollar? You have banks and banks have dollars. You can transfer it from one place to another, forgetting that banks don't work over the weekends, forgetting that banks sometimes take like 2 to 3 days to actually settle across border. So again, stablecoins is the proof that 24/7 global transferability on its own is a great feature now, basically fueling a $250 billion stablecoin market roughly.
Yeah. How do you see, I know the community has also been a big part of eToro. How do you see the community playing into all this? I think I saw some headlines that there were some new community features maybe a few weeks ago prior to this release. But I guess at a high level, post IPO, how is the community holding up? And what are some things you're hearing from them on the ground, either about this announcement or about what we're seeing in the markets overall?
So actually, we're working on another announcement for next week. So maybe I can
Oh.
come again. But a lot about actually how we're helping our popular investors, our top pro investors, basically on the platform, use AI tools to get more sophisticated and as sophisticated as hedge funds in how they can trade on the eToro platform. So I will have to wait. I probably ruined something for our PR right now, but for next week as well.
No, you're leaving a cliffhanger. It's good. You're gonna come back for more, and you're always welcome to come back. So,
but we were super excited about, like, first of all, in the IPO day itself, we brought a lot of our pro investors out of the community to actually participate and be on screen there together with a lot of the employees of eToro across the globe. So we see a lot of them very proud. Some of them have been in eToro for 5 or 10 years. Our top pro investors being copied on eToro today surpassed $150 million each. So they're already basically managing large size of money, and now they're actually excited as they see the IPO as sort of a milestone to continue the growth of eToro towards hundreds of billions of dollars of assets. And obviously that's a very big opportunity to the popular investors in eToro.
Question for you, Yoni, on the tokenization, because that's really what's like kind of catching my eye a lot. And I think a lot of people have an appetite for private companies, for example. Like everyone's itching for SpaceX to go public, for Starlink, Databricks. Do you think that if tokenization continues the momentum and there's ways now where investors can get exposure to those names without having them go IPO, would that be a tailwind or a headwind for these IPO companies? Will they see the demand for their company and want to go public now because they see proof in the pudding, or do they kind of want to stay behind the scenes, not deal with, I'm sure you've noticed past 2 months, the headache of being a public traded company and the anticipation of your earnings report, your first earnings report? Like, what do you think the psychology of these CEOs and private companies are kind of going through with this tokenization momentum?
So I think a lot of this eventually goes again into sort of regulatory requirements and regulatory sort of definitions. Right now, if I remember correctly, private shares are only for accredited investors in most cases in the US. And if not, it's actually quite complicated to generate access to them. Different rules, by the way, in the UK, in Europe, in Australia and Singapore, where we operate. So one of the challenges is when you think of a private token, you need to think of where is the issuer and where is the buyer, right? Because both you need to basically adhere to the regulations of both. I think if you think, by the way, of eToro pre-IPO, what we saw are like our shares, sometimes employees, right? And a lot of, by the way, private companies try to sell their shares on different platforms of basically secondary markets. So it's not something that doesn't exist, right? It does exist today in the private shares as well. You can probably try and get some SpaceX or X.AI shares if you really try to look for them, but they'll be on centralized secondary platforms and usually only for accredited investors. So I think the opportunity there of tokenization is, again, to create more liquidity in those assets, to create a standard for companies to be able to source them faster for customers, and for price discovery to become a bit more efficient. Now, price discovery and rights are what's the sometimes concern of private companies, right? So if you think of a private company raising funds at $5 billion, but maybe if their private shares would be tokenized, suddenly they'll find out it's trading at $1 billion, then it makes it much harder for them to raise money, right? So there's some conflict between sort of private, public, and maybe tokenization of private, which is somewhere in the middle. But I'm a very big believer eventually in the democratization of ownership, of finance. So, I've been investing in startups for probably at least 15 years. Howard's been an investor in eToro for about 15 years, I think, as well. So again, I think it's a great asset class investing in startups. And I think tokenization will enable it to be a global asset class that's, again, transferable and similar when it trades on all of the different platforms. So it's really about creating standards, right? So everything around like blockchain is creating the standard, and when the standard is there, sometimes sort of the markets explode, where it's the ICO market of 2017 or the NFT market of 2021.
No, one last question before popping over to you, Katie. I'm a thematic investor. I've noticed fintech is becoming sexy again. I think there's a renaissance where for a couple of years it was just considered a UI wrapper in a lot of products, and they were penalized for years. Now, coincidentally, the time that you went public, that Circle went public, there is a renaissance on attention now on that fintech space. Why do you think that is? Do you think it's also because investors are having an appetite on crypto exposure without having to risk the biscuit on actually owning the crypto assets? Like, what do you think is happening in that space right now?
So first of all, you can look at fintech and crypto tech, right? But generally, I think 2025 is where a lot of fintech companies have made a successful transition, like eToro has done, from loss-making revenue and all growth position in 2021 to $300 million EBITDA profit in 2024. And I think that's what we've seen in a lot of both public and private companies doing that transition, which now fuels to like the new categories of investors, because value investors and investors that look at PE multiples can look at fintech companies. So one part is companies are actually better, they've scaled, and they're profitable. And the second part is I think everybody understands the potential of now fintech, and specifically two very big themes in fintech. And one is, and we're actually sort of focused on both. One is the customer experience, or what Gen Y says is a product. It's actually a mobile app. You ask my father what's a product, he'll say like a hedge fund or an ETF. You ask like my age or younger, they'll say like it's the eToro app or some other app, right? So that's a very big difference, and the opportunity there is the largest transformation of wealth in history. So $80 trillion that are going to move from older generations to younger generations, to our generation, to Generation Y. $80 trillion in the next 25 years. That's the US alone. Another 60 in Europe. So $140 trillion are going to move from people who are 65 plus roughly to people who are now in their 30s or 40s. And we're used to managing our money through apps. We're used to having access to see the information, to make decisions where, sometimes, older generations just get a report via snail mail and say, hey, this is my product, my account statement once a month. I think that shift, everybody understands now the opportunity on that shift on the front end. And on the back end, it's what we see in crypto and blockchain, whether it's the promise of Bitcoin. Everybody's talking about Bitcoin being digital gold. I think gold is now around 20 trillion. Bitcoin is 2 trillion. Everybody's looking at that opportunity and asking how much further can it go, especially with, you see the accumulation strategies of the treasury companies, etc. And I think the other part is the blockchain, which we talked about, tokenized stocks. Everybody understands this is superior technology. It's going to replace all of the underlying technologies in finance over the next 20 years. Everything is going to move to become digital assets because we're not going back to analog. And I think people just now understand the size of the opportunity, both in the US and the global opportunity, and are willing to basically invest in that future of growth.
Well, I mean, fascinating stuff. And it feels like a lot, I mean, we talked about this at the top, but I feel like a lot has really evolved and changed since we saw you in May. especially the stablecoin news. And sounds like these themes too just keep getting bigger. So you'll have to come back and share more updates with us. By the way, I love that swag. I love that T-shirt. If that's available in a shop, I might buy it.
We'll get you
Okay.
some swag next time I'm in New York. You're getting a cap, a swag.
I will do it. Well, we really appreciate your time. I know, you're prepping for all sorts of things. So thank you so much for stopping by, and you're always welcome here on the show.
Thank you very much. Hi,
Okay.
Katie. Thank
See
you.
you soon.
Thank you.
See you soon.
And we are getting ready for the trading day to begin, and we are deep into earnings. We got some big ones. We got Robinhood today, Shy. That one's a big one to
I know.
watch. Microsoft, I believe, Amazon. Are there any in particular that you're really keen on tracking later?
So I
All of
can't
them.
speak on I can't speak on the Microsoft front because I got some knowledge on that
Okay.
already. But for
Alright.
other ones, yeah, I mean ARM I'm very interested in. Clearly, I don't think people realize that ARM is not
Yeah.
just the blueprint of the digital economy anymore. Like it used to just be like they handed over like how you make these chips. Now
Yep.
they're becoming a data center play. That's very interesting. And
Yep.
Renee is this incredible CEO. Robinhood, expectations are very high. This stock has not tripled, but it's up a lot in the past 2 months. And you have to ask yourself, at $100 billion company, what's left for them to prove? And there might be some profit taking on Sell the News. Even if it's in an elite report, there might be some profit taking in the near term. I think you're going to like, you also saw what happened at SoFi. I know it's a totally different business, but like
Yeah.
SoFi did a secondary offering that
Yep.
just deflated the momentum on the earnings. Who knows if Robinhood is going to do something similar? Like these, again, these offerings are from a place of strength, not weakness. So even if company doesn't really need to, and they ran up significantly in the past quarter, they might do an offering just to be more acquisitive and be more aggressive on the acquisition front. Because right now, I want to say like they're traditional fintech companies, but like crypto is a very interesting lever for them to pull. And in order to do that, you kind of need to acquire companies who have crypto assets so you can just synergize into your own ecosystem rather than build it yourself. Maybe Robinhood does something similar to SoFi did after a strong report. I mean, listen, it's $90 billion now. If they do a $2 billion, they can do an offering for $2 billion, and what? That's going to be a 2% dilution. That $2 billion can acquire a lot of things for them on the acquisition front. So, like, I think Robinhood is probably going to it's going to take a lot for them to like get to 115, for example, but maybe they do. I think a lot of people are waiting to buy the dip on this name, so I don't think it's going to go pull back too much. Some other names.
How long do you think they're going to be waiting for that? Because I feel like, like they have been having quite the run up. What are they up year to date? I can't read that far away, but yeah, I think that's going to be. I think you talk about that too. You're waiting for a pullback, but we'll see. It'll have to be some sort of black swan. Go ahead.
Let's see. Let's see what the 200-day moving average is for Robinhood. That's usually a good pulse check on. The 200-day moving average is, it's at $52.
Okay,
they're nearly double above their 200-day moving average. That's clearly it's overextended. It needs a breather. So I think that the next logical level for me to look at is $75, which is where the 21-week EMA is. But also, like, it's just ever since it broke out of $65 in May, it's been in pure discovery mode, and needs to maybe come back a bit. But nothing wrong with that.
Yeah, I mean, it's interesting. Yoni just said something that he was kind of saying, like he alluded to a movement from fintech to crypto tech, and I feel like that's like what's going on now. These companies, it's almost kind of like we're talking about SaaS turning into this other thing, and it's kind of the same thing, but it's a rebrand. But it sounds like all these companies want to be seen as more crypto forward. You saw that with Robinhood. Obviously, you're seeing that with eToro. We talked yesterday about SoFi. and you mentioned needing to make some moves there. I thought that was interesting. Fintech becoming crypto tech, and then it made me wonder, these legacy financial institutions and products they had to think of a fintech strategy the last few years to catch up, and now they have to think about a crypto tech strategy. And it made me wonder, like, man, like with the tokenization thing, like how does a Schwab keep up with that? What are these companies thinking? What are they doing? Because that's like two levels of innovation deeper than they were dealing with before.
Yeah, and also that generational wealth transfer. Like
Yeah,
I could tell you guys, the young millennials, Gen Zers, they're not going to go to Schwab or these
yeah,
legacy banks because it's just they're accustomed to the UI experience via Robinhood or
yeah,
the whole platformization of like what's the latest and greatest via SoFi, like these neobanks. Like they're not going to go back towards. They're not brick and mortar because they're
yeah,
not, but it feels brick and mortary in a way. But I think that crypto, if they become crypto tech, that's a massive TAM expansion, and all they did was add add one word
yeah,
into their thing. Like it's not that different than what they're doing already. It's just
yeah,
regulations, and once they figure out the regulations, their TAM expansion is ridiculous with minimal capex.
yeah.
Minimal capex.
Fascinating. I'm curious to see how the tokenization
Mm.
stuff takes hold at eToro, because we've been talking about that one a lot. Let's talk about Microsoft. Oh wait, you can't talk about Microsoft so much, but we can talk generally about. Can you talk generally about Microsoft
I
or?
can't. I know Azure numbers. I can't talk about anything
Okay,
else.
okay.
Yeah, I
That
can
was
talk
what I
about.
was gonna. I was like, let's talk
Oh,
about the cloud.
we can
Let
talk Meta. We can talk Meta. I
Yeah, or
guess that's a good
Amazon
one.
even. What about AWS? Amazon, and we've talked about their retail margins growing.
Mhm.
We'll also probably get a full readout from Prime Day, which we've talked about before. That gets all the headlines, but it is all about the cloud. Um, Amazon in particular, anything there you're looking out for, or any insights ahead of
Yeah.
their readout?
So Amazon's interesting. Let me tackle their AWS first. I think everyone knows that their AWS is the king of compute. Their growth is nearly half of what Google's and Azure is.
Mm,
That's not too much of a worry because they're larger. They have a lot larger base. However, when you have a Google growing 32% and AWS is growing the high teens, eventually it's going to become closer and closer. And now you have to actually worry about why you are kind of not underperforming the market, but you kind of are a little on compute, like why it's such a drastic difference. Even like Azure, they have like very Google like numbers. So like I think that AWS, it's just not their way. I feel like their way is very much towards the Apple route of
mm,
they know their moats. They're the retail is going to enable them to kind of capitalize on all these secular growth themes via drones, physical AI, and AWS is their cash cow. Like that's how fun.
yeah,
That's what funds everything else in their organization. But like I do believe that I don't love that they're not making their foundational model a bigger rock uh, to going forward, because I think that you have to own your own vertical stack. You're seeing it across the board with all these other major players on these acquisitions. They're kind of like, all right, this is my data. You're gonna have to, I want to control everything. I don't want to buy off the shelf stuff anymore, like TPUs, Trainium, Maya. These are all things that all these bigger players, they want to own the whole process because that's end-to-end control over costs. And they fully aware that AI is going to be an indefinite demand. They can't just go external anymore to acquire the pieces in order to fulfill the AI demand because they need to control their costs. It's pure econ 101. Amazon, I know they're doing some. I spoke to Dano about this. Like they are doing some things, controlling their own foundational model, but I think they are relying a little too much than I would like on Perplexity,
mm.
owning that. I forgot what percentage they own, but they own a lot of that percentage, or not Perplexity. Sorry, I think it's
Oh,
it's
oh,
Anthropic,
yeah, yeah, okay.
but
Which Anthropic just got a new valuation. Uh, where did I just see this? They like tripled their Anthropic. I just saw this. It's one of those things. It's like you bookmark on X and then you never go back. Uh, Anthropic nears deal to raise funding at $170 billion valuation.
See,
as
that's
last night.
guys,
Yeah.
that's nuts. Like I get it. Like LLMs are this is where I think the AI bubble lives.
Mm.
These LLM valuations in the private market. The reason I say that is CrowdStrike and Snowflake combined are worth less than Anthropic now.
Wow.
That's crazy to me because I get it. Like again, large language models are going to be fueling every part of this world, and I think eventually it's going to be a commodity, clearly. And you're going to have to do like what's next now if you're an LLM. Like for Perplexity, they should try to destroy Bloomberg because they're very good on the financial front of LLMs. Anthropic, the people I've talked to, it's incredible for code generation.
Yeah.
Generating code for developers. Like that's why they have such a high valuation because again, vibe coding is very real. And this could be the go-to for vibe coding. But either way, these software applications are going to become the hidden gems of this AI era. You don't know who's going to thrive and kill it, but cloud is the the best at the moment right now, which is the Anthropic. Thank you, Keith. Product. So I think that it's a little ahead of itself. None of these companies are profitable. Their probably growth rate's insane, but there's a gold rush right now. But 170 bill, that's wild to me, especially when you have like CrowdStrike 100, Snowflake at 60, like, and they're adjusted, but like they're still like their free cash flow margins are ridiculous.
Yeah, I think it's every time I open a tab, one of those LLMs is valued higher than they were before. You briefly touched on Meta. Let's talk about them because they had a couple of things in their last earnings they touched on their CapEx expenditures and AI. Obviously, Mark Zuckerberg's been on a hiring recruitment spree. They also mentioned some updates to their advertising platform. I think it was last earnings where they said, within not too far in the future, every ad on Meta will be AI generated. So they threw a lot at us last time. For this one, do you expect, Shai, a lot of focus on this AI, the super intelligence efforts? Where do you think they're gonna focus the commentary?
I think it's not gonna do anything in the near term. I think you're clearly seeing Zuck go all out right now in the super intelligence race. And in order to do that, it's going to have some near-term bumps on CapEx. I think that the Meta numbers will be noisy this quarter. I think that CapEx could spike again. I think margins might compress a bit more. And I do believe that tariff removals will show up in some form on softening ad revenue from the Asia-based e-commerce, which again, Temu pumps a lot of money into Meta's ad business. I don't know how that's going to affect them. I just think that we're going to see early signs of some heartburn on all those components, but also this is clearly not a social media company anymore. And I think that Zuck is doubling down on the fully integrated AI infrastructure powerhouse company narrative of Meta. And in order to do that, it's going to hit their margins. So I think that where I'm going to be most watching towards is computes, like their compute part of their earnings, where that's where everything kind of stems from Llama, from the Reels ranking, from internal like productivity tools. The productivity boom, it's all correlated to computes. And I think the CFO Susan is her name, last quarter said that it hit a ceiling. So I think that Q1 CapEx bump wasn't just about getting ahead of demand. It was also about catching up. We'll see what happens this quarter. Like if this quarter doesn't show that the new CapEx is expanding compute capacity, I think that tells you that Meta is going to be paying more for the same capabilities, and that's not the best. But our bet of Future, I know that because we talked to their management, is that it is expanding capacity. And I do think that the market is still underestimating how tight this kind of delicate supply and demand equation has become across all the hyperscalers. And I do think the Meta's approach is a very similar to Tesla's energy approach. And market didn't take Tesla energy seriously until they started hitting real deployments. I think the same thing's going to happen with Meta.
Let's stick on big tech for a bit because I spotted something you posted on a metric that you've been using, the PEG ratio, to talk about big tech stocks. And I think your commentary was it's a metric most people maybe don't know of or ignore. What is this peg ratio? How do you use it to kind of evaluate if growth is priced correctly for some of these tech companies?
Yeah, so it's Peter Lynch's favorite tool. If you guys know who Peter Lynch is, he is the goat on valuations, and I think that's the PG ratio
Oh, it's not
specifically.
peg. I'm so upset it's not peg.
You can say peg. It's
Can I
okay.
say peg?
Yeah,
I
no
don't,
shame on that.
PEG, peg. Either way, go ahead.
Yeah, so I think for the PG ratio, like it's very, if you just say what they're trading on forward earnings, like okay, that's one part of the formula, but also you want to see how much are their earnings growing as well, because that's where you can really get the full picture on how fast the business is actually kind of growing. So a great example right now, Google or Alphabet is trading at 20 times earnings. Really freaking cheap if you just use that one metric. But if you combine it with what their earnings growth is going to be in 2026, it's at 7%. That's the lowest among all these Max 7 names. Why is that? That's the margin that they're like relying on in their search business is slowly like getting affected. They're investing a lot in CapEx as well. A lot of their infrastructure investments aren't paying an immediate ROI right now. It's a combination of like a perfect storm where Google looks cheap on an earnings multiple, but they don't in the PG ratio. And that gives a bigger picture of why probably it's not catching the bid that a lot of investors deserve. Another one, Apple. Apple is trading at, let me see, it's the most expensive among Max 7, but I think their forward earnings is at a 29, for example.
Okay.
That's like it's a little pricey for that. But they're supposed to be growing their EPS at 9%. So a little better than Google's, but Tesla, for example, the reason Tesla is so reasonable, they're supposed to be growing their earnings 57% in 2026. That's why there's like, I think it's kind of holding up well. It's gone so much bad news this year. Like there could not be more of a FUD generated 6 months for Tesla share, Tesla, the company itself. Everything's going down year over year, like just bleeding. Eventually, it's going to stabilize a bit and it's going to be an easier comp. And now going forward, it's going to look a lot sexier on the year of year comps. And that's why it's benefiting from this. But I think the biggest call out here, NVIDIA. NVIDIA now is worth more than Amazon and Meta combined. They are a massive, massive company. They're at all-time highs running up. They're so cheap, guys. It's still undervalued. It's a 1.1. If they dip 15 more percent, they qualify for Peter Lynch's PG ratio of under 1 is mispriced growth. That's why it keeps running up, because it's getting all this demand. It's nobody's diminishing them on their GPU training data. Yes, there's gonna be an alternative solution that gets sub 10% share via AMD, and there's custom silicon chips will get probably 20%, but the rest of the 70% is still all NVIDIA. And you're seeing that AI infrastructure spend is increasing and being estimates. They're going to be printing. And I think that's why they're going to probably become the first $10 trillion company. I think that this runway on AI infrastructure spend is nowhere close to wrapping up, and they aren't expensive. And it makes sense to me on why they're continuing to catch a bid. Amazon, I think there's a missed opportunity because you're clearly seeing right now the average comp for Max 7 is 2.6. Let's just say that 2.6-ish range. They're at 2.0. That is a 20% discount according to their Max 7 comps. I think right now the market, Wall Street, etc., aren't appreciating the margin expansion opportunity on the retail side of the business due to physical AI.
Yep.
And I think that's going to help. And I think they're going to just catch a bit to return towards the mean, because there's no reason why Amazon should be trading at a 20% discount among their Max 7 peers. There's zero reason in my eyes.
Yeah. I'm glad you brought up the physical AI. I forgot we had talked about that with their retail operations. And they did announce in the UK some factories that there were more, I guess, physical AI robots working there than human beings. So super helpful context, great metric to look at. Let's shift to macroeconomic news. We have somehow every time these Fed meetings come, I'm like, how is it time for another
Ooh,
FOMC?
jeez.
What?
Palo Alto's getting destroyed right now.
What?
That's crazy. I know what
Was it
it's
on the
the
merger
cyber.
news or their
Yeah, it's
acquisition?
they officially announced the acquisition
Okay.
today, 25 bill, but they're down 9% right now after being down 5% yesterday. It's a massive move.
So
Sorry.
why might that be the case following this announcement?
Price tag. I think price tag. Their biggest announcement previously was $3 billion in their
Mhm.
history. Now this is 25, and it's not the sexiest cybersecurity company. I think that
Yeah.
it's not. Mark is probably punishing them on not conquering their endpoint solution better, and why not pay for like not five, half the valuation for Sentinel One. But I actually like this acquisition. I think it actually
Mhm.
makes a lot of sense. And I wrote about it a little earlier today, but I just think that Palo Alto is clearly seeing that there's going to be an explosion of AI agents going forward. And I think that in order to there's the future is going to be where identities aren't going to be you and I logging in with passwords, but it's going to be constant fleets of AI agents, autonomous systems, like all non-humans making decisions and executing tasks on behalf of an enterprise. And this is clearly where things are heading. It's not happening right now in your face because agentic AI still hasn't hit this chat GPT moment, but whichever company governs the privileges of these like autonomy systems, AI agents, they're going to have to also verify these LLM outputs in order to trigger these transactions or access these sensitive systems. That's why ChatGPT mode for AI agents is so far away, because there is a huge governance issue. But I do think that's where CyberArk fits in, because that's exactly what they do, identity. And that's why Palo Alto bought them and had a pricey tag. Price tag was really high on that deal. I think what's even more crazy is Palo Alto paid 25 bill for CyberArk. I think they've lost close to $20 billion since the announcement. So it's like they almost lost the acquisition costs in just past day or two. So like I think CyberArk, like I said, gives them the control layer. I think that initially they're not going to like do the price tag, but this is also one of the dings I had on Palo Alto for a while, and why CrowdStrike is my top dog.
Yep.
CrowdStrike doesn't have to acquire their way into
Yep.
getting the latest and greatest. They have all these module adoptions that are 9+ because they can internally organically have these features get added, and they and just like, what if identity is a bottleneck, we're going to create identity in-house, don't have to pay $25 billion to do that. So again, Palo Alto is very much like in the Salesforce arena, where they have to acquire these tools in order to sell this platformization angle. Clearly it's still worked for Salesforce past decade or so.
Yep.
It's just not my cup of tea, but Palo Alto still is a tier 1 player. I think this is the name of the game for them, and this is a good acquisition. I think that the market's going to like this in the long term. Immediate, big value, big price tag, and probably not the sexiest acquisition target.
Yeah. Interesting. You mentioned those guys moving a bit, then I pulled up the trending tickers on Stocktwits to see what was going on. And then I noticed Etsy is up 6%. They had a good earnings. I know we don't talk about those guys a lot. I personally spend a lot of money on Etsy. But that's one that every time it comes around, I'm like, wow, they're doing a decent job. So they're moving a bit today. We have a little bit of movement on Starbucks ahead of their earnings later on. I'm very interested to see updates on that one. I like a bold new CEO coming in, promises of a turnaround. And now let's see. Let's see if writing names on the cups did it for them. Luckin Coffee is the other coffee player trending.
Let me see what Starbucks' PG ratio
Yeah.
is real quick.
How do you calculate this? Is there do you have like a spreadsheet or something, or where do you normally do this?
I look at their, I do in my head, which is probably not the best thing, but I look at their price to earnings and divide that number by their earnings growth.
Okay.
So right now,
Real
price to
time.
earnings is 36. Divide that by 25. It's not that bad. It's like a 1.3, 1.4. So it's like but you have to also factor that in what the comps are in their space. Like I don't know if anything above 1.0 is like you should not be. It should be under 1.0. I don't know, but it's all comp
you're
based.
specifying tech.
Yeah.
Okay.
So
interesting.
this like look up Dutch Bros. Look up.
Yeah.
I wouldn't look up Luckin. It's a fraudulent company. I'm pretty sure.
They just opened a Luckin in the West Village of New York.
I saw it when I was in near NYU. I'm pretty sure.
Yeah.
I was Yahoo Finance's studios there, so I was I walked by it and I saw. It's like I did not know it was domestic.
I think I've never seen one never seen in New York. I think that's the first one people were rubbernecking a bit with that one. But yeah, we have what Wingstop. This can't be right. Wingstop. What? It says Wingstop. Oh, I'm checking this.
Well, Wingstop might be an interesting comp for consumption as well. Let me see what their
No, Wingstop's up 27% today.
They're trading at 71 times earnings. That's ridiculous.
Wait, what? They must have. Oh, they crushed their earnings. Wow. I thought there was a typo. Holy jeez. Whoa. I actually recently had Wingstop for the first time a few weeks ago, and it was very good.
There's no world they should be trading at 70 times earnings.
I'm like, what? I'm reading it in real time because that is. Yeah, they crushed.
Fuckery is happening. It's weird.
Well, revenue 672.7 million reported versus the analyst estimates were 645. Yeah, what? I don't know. Are they getting memed? I don't think so. I think people just like their Wingstop, but I've never seen like a QSR jump that much after an earnings call. I don't think. But we'll have to watch that one. That was one of the ones where I was like, that has to be an incorrect number. That can't be real. But hey, Wingstop. We got 2:30 today Eastern. We got the Fed meeting happening, as we talked about earlier on. We're not expecting any breaking news outside of what people expect, other than we might see some political jockeying for people trying to dissent and curry favor as Powell is nearing the end of his time there. So I think that'll be interesting to see how people play that. We got more economic data dropping this week. Of course, we have Robinhood, we have Meta, Starbucks, all these coming later today, which we'll have a lot more to talk about tomorrow. Shai, anything else like that you're looking out for this week? I mean, I feel like it's a lot of just like taking in what's going on with earnings in aggregate. We've got a few out so far. So far, is it about as you expected things would be going this cycle, or are you waiting to see some of these bigger names report?
Yeah, I think I for sure want to wait for the bigger names to report, but I really do believe it's so far we're not getting the earnings reports to justify another leg up. Like we're not seeing too much of a reacceleration. I think we're seeing a lot of beats. Narrative is slightly. I don't think it's uber aggressive. It's slightly positive. I think again, your CEO, you're not willing to stick your neck out right now. Like yes, we have a sandbox of what the tariffs are going to be, but like, do we really? If we have someone in charge that can flip a switch and like blow something up, metaphorically, I think that I just think that everyone's in risk adverse a bit, and I think that we're going to see a lot more offerings. I think a lot of companies, a lot of sectors are bloated right now. I think space, quantum, drones, these are all sectors that have ran up significantly, that are very capex heavy, unprofitable. So I think if you're a small cap, mid cap growth tech growth investor, I would not be surprised if we see some dilution, and I want to see that. Rock Lab still has not done that. I want them to do a secondary. ASTS did one. You're seeing SoFi do one from strength. Both have done it in place of strength.
Yeah.
Raise 1.5 bill. Do it. Like in the space economy, it's infant days right now.
Yeah.
You can acquire assets to sell your space logistics vision right now. Raise 1.5 bill. I don't understand why you don't do that. But yeah, either way, I have dry powder on the sidelines, ready to freaking add. Palo Alto, if it hits a certain level, I think I might be initiating a position there.
Okay.
We'll see.
All right. Well, chomping at the bit to see what happens with Palo Alto, Wingstop, all this random array of things going on. We will be back right here tomorrow at 9 a.m. again to talk about everything that is going to happen in the next few hours. So stick with us. Head over to Stocktwits. Tell us what you're thinking. And we'll be back with you all first thing tomorrow morning. Thanks, everyone.